Good morning, viewers, and welcome to Indian Open right here on BloombergQuint Live. I'm Neeraj Shah, and the start tells you the story, isn't it? The markets are not too impressed with the 3 days of announcements post Friday market hours, and that is leading to us doing what we are doing or likely to do, despite the rest of the world not looking all that bad. Because frankly, US futures are in the green. Asia is trading with a bit of green, so the world is looking okay, but we're not likely to start off on a big bang note, and that's small negative that we have for ourselves. The question is, what is the longer term trend looking like? And I think it's a conversation that we'll have a bit later on with Kenneth Andrade as well, but also very important to dissect all the key newsmakers today and the near-term sentiment mood as well. And we should get in our experts to talk about that in just moments from now. Remember, the technical experts join in about 8:45, but before that, our fundamental expert for the day, Avinash Gorakhshekar, is with us. We'll get in Nikki, my colleague, to speak about the key newsmakers as well in moments from now. But Avinash, good morning. Thanks much for joining in. Suffice to say, the markets starting off the way they are, or the way the SGX is indicating, seems to suggest that the stimulus is not the market mover, and therefore, what should an average investor watch out for, Avinash?
Good morning, Neeraj. Neeraj, I think from a market standpoint of view, I don't think the markets were quite excited from the stimulus announced by the government. Although in the longer term, the kind of announcements made by the government could obviously structurally improve the macroeconomic scenario. In the near term, I think the markets would closely watch on corporate earnings numbers, and I think what kind of commentaries come from the company management, because this is going to be the first focus point. The April to June quarter is unlikely to be great, and in fact, with the lockdown now getting extended further, our sense is that even the month of June could be a dry month. So overall, I think earnings numbers are quite important, and I think the markets could obviously look at the big corporate announcement from Reliance. I think Reliance is one stock which could possibly hold up the market for today. Another positive surprise coming in the form of a new investor for the Geo platform, and I think the rights issue open. So I think Reliance will be in focus today and could possibly be responsible for holding the market, despite the fact that the news flow from the stimulus is not something which has excited the markets.
Yeah, and we'll get to Reliance in just moments from now. Avinash, just one quick follow-up question, and that is on the banks and the NBFCs. Now, this moratorium or no insolvency cases for the next 1 year, is that a net positive for NBFCs, or do you think the overall trend is so bad that this will not be looked at by the markets?
No, I think Neeraj, the announcement of the moratorium by a year is definitely a positive development, and I think it's going to benefit the larger NBFCs. I would believe that quality franchisees like Bajaj Finance typically has got the maximum amount of leverage, and we could see a lot of market share restructuring happening in the sector. So I think the smaller NBFCs are not going to benefit at all. In fact, the larger ones could possibly benefit at the cost of the smaller ones. So I think net we could see some stock specific activities here. But overall, I think markets are unlikely to give any significant re-rating, at least in the short term. Yes, over the longer term, looking at FY22, I think definitely this could be a good opportunity to actually chip in into some quality franchise. But yes, in the near term, I don't think this regulation is going to create a kind of a buying sentiment in the near term.
I'm asking for whom?
Okay, Avinash, the other question is, and as I said, we'll get to the biggest newsmaker in just moments from now, but the result that we are watching out for in the session today, and that is Bharti Airtel. Now, my question to you is, can you tell us what could happen to Bharti Airtel depending on what the results throw up, or you don't think the results will be that big determinant for the stock?
I think Neeraj, results would definitely matter, but I think the bigger factor is now with Jio getting a significant amount of valuation premium. Most participants are going to look at the second best option in the telecom space. Our sense is that Bharti would be posting decent numbers, and in fact, the ARPUs would be significantly better, in this quarter. More importantly, data consumption has gone up significantly in the last 2 months. So what is the management commentary on the kind of subscriber addition? Because COVID-19 definitely would impact their subscriber addition. So I think the markets could closely watch at some key data points like the ARPU growth, the subscriber addition, and obviously the African business. So I think all said and done, numbers may not be important, but the commentary going ahead is going to be important. And I think the markets could obviously, give some sort of comfort if they get some positive news flow from the management.
Yes, indeed. Avinash, just one follow-up, and then we'll get to Nikki for the stocks in news. This agreement between the reported agreement between Bharti and for that Indus Tower merger, is that net positive for Vodafone Idea? And therefore, my question is, would it pay to turn bullish on Vodafone, or you would not consider Vodafone in the scheme of things right now?
Neeraj, I think clearly within the telecom space, we continue to be positive on both Reliance Jio and Bharti. I think Vodafone, despite the fact that this industry development is longer term positive, in the near term, they will be having significant challenges. And looking at the kind of, significant stress on their cash flows, I would not be surprised that Vodafone would remain a marginal player. So I think it's better to focus on Bharti as well as Reliance Jio. And I think any spike, if at all, comes in Vodafone could be used as an opportunity to book out and probably increase some exposure on Bharti Airtel.
Okay, Avinash, now since we are continuing with telecom, I just want one more follow-up question, and that is on Reliance Industries. That's going to be that big stock and the big newsmaker in the session today. What's your anticipation of how the markets would react to this? Let's also keep in mind that the rights issue is a couple of days away from now.
No, I think Neeraj, net the sentiment and the news flow for Reliance continues to be extremely positive. Our sense is that a new investor coming in on the Jio platform actually reinforces the belief that most of the strategic investors see a lot of value in this platform. Although the earnings visibility from the Jio business now could possibly percolate, in the next financial year. Clearly, from a rights issue perspective, I don't think the company could be having any hassle in raising this money. They should be comfortably raising this rights issue money, which is roughly about 53,000 crores. So net, I think you could be possibly seeing a stronger kind of earnings recovery from the Jio business. I think, yes, to some extent, the oil and gas business could remain a little muted for the next 1 or 2 quarters. But overall, from a stock point of view, I think current price definitely looks interesting, and one should definitely accumulate, in a small way. Clearly, I think FY22 should be a lot better compared to FY21.
Okay, viewers, now keep in mind the belief that a lot of people have when it comes to Reliance Industries is that you already have a well-oiled machinery of the Reliance stable running this business, and you have a set of smart investors who are coming in to buy stakes. It's not routine, just financial investors who are chasing money. I mean, Vista Partners or General Atlantic, for that matter, Facebook, of course, which is the largest one, are all global tech-savvy players. Facebook being the engine, really, and some of the others are the smart financial investors who have private equity experience in technology, and therefore the belief that the potent combination of Jio running a machinery in India and the largest telecom company in India, and the combination of these two might actually prove to be wonders for Jio. Now, the only way you can buy Jio currently is through Reliance. So I know a lot of questions, Mark, about the sagging business, the oil and gas business, etc., which is not quite doing well and all of that. But hey, you have no choice right now. And with the investments that these guys have done, if you want to play Jio at the current point of time, then this is probably the only way. Sure, you could wait for when the proposed delisting or the dissipation of the companies happens, and then you buy into Jio afresh or standalone. But that's a thing for the future. You don't know when it will happen. So for now, this is probably the only way to play it. The valuations are not cheap for the console entity, but as I said, scarcity premium. And right now, even the rights issue would be the other thing that people would be monitoring. Remember, it's at 1257. If you are indeed a shareholder of Reliance, 15:1 is the kind of swap ratio or the rights issue ratio that has been proposed. But I'm told Nikki Mirchandani, my colleague, is on air. Nikki, we've already spoken about Reliance, but there are a clutch of other newsmakers in the metal space and in the pharma space that you're wanting to point out today.
Yeah, sure. Good morning, Neeraj. I'm going to start off with Cipla, where the Q4 numbers were rather disappointing. EBITDA at 630 crore was a large miss from what the consensus estimate was on account of a 200 basis point hit on account of COVID-related issues, and then you had impact due to a lopsided remediation cost related to the Goa plant and a lower other operating income also weighed on the operational performance of Cipla, which reported rather dismal set of numbers for Q4. Metal Pack expected it to, a lot of slew of, announcement came in on a Saturday for this sector. One important one being that now there is going to be no distinction between the captive and the non-captive mines for mineral sector. This in turn would lead to aggressive bidding for Odisha iron ore mines, which already are enjoying premium in the round of bidding, the first round of bidding that we saw. That could weigh down a little negatively for players like JSW Steel, which are in the bid to acquire these mines and rather could be benefit. It's going to be a positive move for NMDC and Tata Steel, which have their NMDC being a completely integrated iron ore player and Tata Steel being a completely integrated steel player, which has huge reserves of iron ore mines with itself. So this is definitely a positive for them. For JSW Steel, it's negative right now, but then it could be a game changer for them over the long term. Also, the second announcement came in on joint account of a joint auction of bauxite and coal mines. Now, remember, both of these products are used for aluminium plant. None of the players right now are planning to expand it. So it's the joint auction definitely is going to be positive for Vedanta because the company is right now strapped for bauxite reserves. That's been a key issue for the company. So clearly this announcement is a positive for Vedanta. And the third that we have, a lot of measures have been announced for Coal India, where it's going to be losing out the monopoly. But that's not the first time that this is happening. They've been trying doing this systematically over a period of 1.5 years. Over and above that, they've also given a relief of around 50 billion rupees for CIL customers. And apart from that, there is a
Oops, okay. I think we've just snapped that connection with Nikki. Would have loved to ask her about Vedanta as well individually because there's the board meet slated today. Maybe we'll try and get that going again and just try and see what to watch out for from Vedanta's perspective today. But Avinash, let's talk about some numbers as well. Nikki was talking about the Cipla in particular. What are your thoughts here on these results?
No, I think Neeraj, looking at the numbers, there's been a big disappointment both on the operational front as well as on the US business front. Our sense is that EBITDA margins have come down quite significantly. More importantly, I would believe that looking at the management's cautious stance, maybe the next 1 or 2 quarters are also going to be equally challenging. So within the pharma space, we think it could at best be a market performer. Our sense is that recovery for the business, especially the US business and the local business, could take a lot of time. Maybe post September things could look better, but at the current levels, I think it's a hold. We wouldn't suggest fresh entry at the current level.
Okay, I'm told Nikki's back with us. Nikki, just a quick perspective on Vedanta, the board meet today. What should one watch out for?
there.
Okay, I think we've got a patchy line. Nevertheless, maybe I can ask this question to Vedanta. But Nikki, thanks so much for getting us those. It's just an attempt to try. I think the internet connection is a bit patchy. Avinash, just before we get to the technical experts, Vedanta has these positives as well of the developments that have been announced, but that's a small one. The stock has been on a bit of an uptick. This whole meet for the delisting and the pricing which has been done. Menka's written a whole article on what we should expect from the independent directors as well. What is your thought here on Vedanta from a minority shareholder's perspective? Should one buy, should one hold, or should one not bet on it?
No, I think, Neeraj, today the board meeting is there, so we could get little more clarity post the board meeting. But I think on the face of it, minority shareholders should definitely hold on. My thinking is that we could possibly see a revision in the offer price, considering the kind of assets which Vedanta holds. And unless Vedanta management is able to take raise about 40% from the public, I don't think this offer is going to go through smoothly. The institutional investors would also be looking at possibly the offer price being hiked up. The current price definitely does not give a significant amount of risk reward, at this juncture. So I would believe that it's better to hold on, wait for the management commentary. But yes, definitely upward revision in the offer price could be possible in the near term.
Okay, we will watch out for that. And actually, if we have our technical experts on board, we should try and get their views as well on these, as well as some of the others. I think Ruchit Jain would be with us. Ruchit, if you're there, good morning. Thanks so much for joining in. Before I get to the index, since we are talking about some of these metal names, a quick thought here on the likes of Vedanta in particular, because it's been on a strong uptrend. And today there is a event as well which could bring about further moves in the stock, or maybe bring the stock down. What are the charts indicating?
Yes, hi, very good morning, Neeraj. Well, yes, during last week we did see a price up move, and the good thing was that the price up move was supported by increasing volume. So I think on the lower time frame chart, that is on the hourly charts, there is a high top, high bottom structure along with the increasing volume. So I think for a near-term perspective, 85 to 82 now becomes a very strong support for the stock, and there is a probability of the stock moving higher towards 110 range. So as of now, I would advise that if any existing long positions are there, they should continue to hold on. Fresh longs could also be created with a stop loss below 82 rupees for targets around 105 to 108.
Okay. Let's talk about the markets. Ashish Chatumota also with us. Ashish, let's start off this index conversation with you. What's your sense? We'll start off marginally lower today. Are we likely to see further selling, or do you see support somewhere?
Hi Neeraj. Good morning. So I think, in terms of markets, we were trading in a range, and that range is between 9,050 at a lower end of the range. On upside, 9350, 9400 is where a lot of there's some resistance is being witnessed, and that is clearly getting reflected from the way the calls are being written at 9300 and 9400 strike price. So my sense is that we are trading in a range, and once we see a decisive breakout or breakdown on either side of the range, that's going to set the direction for the market. So as we are closer to the lower end of the range, which is around 9,050, I think what we need to watch is whether we see a breakdown below 9,050. If that happens, then I think a lot of these longs which were getting created at the lower end of the range, assuming that a lot of base is getting built there, they will start liquidating the position, and that's where the selling pressure will start emerging in the market. But for that, we need a clear confirmation of Nifty trading below 9,050 level.
Interesting. Okay, Ruchit, what's your sense? The way we'll start off today, would you start a trade, or would you open a fresh trading position today?
Yes, Neeraj. So no, certainly during last week we have seen a range getting formed from 9,000 to 9,400, 9,500 on the high side. Now the thing is that within this range we have seen good amount of put writing in 9,000 options. Even technically, until 9,000 is broken, there is we are not yet advising our clients to create short positions. So opening after, I think post opening 15-20 minutes would be quite crucial. If we open near this support level and start showing some bounce back, and I think keeping a stop loss below 9,000, one can attempt a fresh long positions, because we are near the support end of this range. So I think I would watch for first 15-20 minutes post opening. In case 9,000 is held on, and if we see some bounce back, then one can create fresh long positions in Nifty with the stop loss below 9,000.
Okay. What about specific stocks? Ruchit, I'll come to you first. Your stock specific ideas for the day.
So yeah, since we have not yet breached that 9,000 mark, so yet so far keeping a hopes of some bounce back, I have couple of long recommendations only. I think shorts would be formed only once we breach the 9,000 mark. Till then, the support end should be used as a good stock specific buying opportunity also. Marico is one name where we are positive from a short term perspective. A price up move supported by good volumes have been seen during last week. So keeping a stop below 303, one can buy Marico for short term targets of 338. And one mid-cap name, Alembic Limited, on Friday's trading session showed a price up move with very good volumes, that too from its moving average support. So I think this is just a momentum play. Keeping a stop below 49.50 for targets of 61, one can attempt fresh longs.
Okay. What about you, Ashish? What are your stock recommendations for the morning?
Sure. So, Neeraj, my first call would be Bharti Airtel, where I think clearly the structure is becoming very, very convincing on the medium to long term. However, we have recommended the stock earlier also in the shows, but I think the way this entire almost 13, 14 years of breakout is supposed to take place, I think that's going to keep Bharti Airtel in the medium to long term in an uptrend. So keeping that in mind, 540 would be my trading stop loss. Immediate short term target would be around 590, but as I mentioned, the targets on upside could be much higher than the short-term targets we are recommending. Second theme is agrochemical theme, which is looking very, very strong, and within that, Coromandel International in the cash segment is seeing a consistent rise in the delivery volume since last 3-4 weeks, and stock is about to enter its fresh all-time high territory after consolidating for last 3-4 years. So I think this is one stock which has a potential to see 700, 750 kind of levels in coming few weeks. So on immediate short term, 600 should be the trading stop loss, 700 should be the immediate short term target in Coromandel International. But again, as I mentioned, the stock is looking very strong from a medium to long term perspective as well.
Well, with the agrarian focus, maybe some of these names look okay. Bharti is looking very strong, and I buy that point as well. So I think we should watch out for that. Avinash Gorakhshekar also spoke about it fundamentally, technically. Ashish speaking about it. Ashish, just a quick follow-up on a stock which was very active the last 2 days, but Friday saw a bit of a dip, and that is Z Entertainment. And the reason I ask this because I'm getting conflicting calls on this. Friday there was somebody who recommended a fresh short on it. Friday morning there was somebody who recommended a fresh long on it. What are the positions, open interest as well as chart positions telling you about Z?
Neeraj, the reason why people recommend long and short is basically the long-term structure of the stock is weak, whereas the short-term structure suggests that some pullback is possible. And depending on the time frame people are taking the call, according to me, if someone is looking from a short-term perspective, definitely the momentum is set for some upside, because if you look at in terms of positioning, there's a lot of long accumulation which has happened between 140 to 155 area, and since the stock is consistently trading above 155, one can expect that the stock is poised for some kind of short covering rally, because a lot of traders who were taking positions since last 5-6 months have a continuous short rollovers in the stock, and if the stock consistently manages above 155, that's the point. A lot of these short traders are going to cover up their positions. So on an immediate short-term basis, I think 185 to 190 could be a short-term target one can expect in Z Entertainment, and for that one needs to keep 155 as a trading stop loss. But one needs to understand this uptrend which we are talking is more from a short to medium-term pullback rather than a directional strong structural uptrend.
Okay. Fair call. Viewers, keep that in the back of your mind. Now, a couple of pockets. Avinash, first to you, the transportation names, right? There was some buzz when IRCTC started accepting bookings that let's go out and buy this one. But then lockdowns keep on getting extended. They have cancelled the tickets till 30th June, and I think it's showing in the way the stock has behaved in the last 2 days. For somebody who's holding IRCTC in the portfolio, is it a good idea to hold, or is it a good idea to get out of the stock?
I think, Neeraj, our sense is that the first quarter for IRCTC could be a kind of a very sluggish kind of quarter, considering the fact that rail movement has been completely curtailed. But I think from a longer term perspective, the kind of monopoly it enjoys and the kind of margins it enjoys, especially on the ticketing and the internet business, I would believe that any dip should be used as an opportunity to buy. In fact, the stock has been holding up pretty firm in spite of this negative news flow, and our sense is that in the short term the stock could underperform, but very marginally. But a longer term, I think there could be a significant amount of re-rating. Possibly, I would believe that the second half of FY21 could be a lot better when hopefully normalcy resumes. So we are positive on the stock, but yes, in the near term, you could possibly see a very range kind of price movement.
Okay. Avinash, what do you make of the results that have come out thus far in the NBFC space? I mean, we have had two names, L&T Finance Holdings, asset quality was stable, but the results overall weak. M&M Finance, the numbers were weak, the commentary was pretty subdued. What do you do with these names?
I think, Neeraj, as far as M&M Finance is concerned, I think the asset quality has deteriorated further, and I think almost 40 to 50%, I think, has gone into moratorium. I would believe that year recovery could take a longer time, despite the fact that management is hopeful that second half could be a lot better. As far as L&T Finance is concerned, I think there's been some positive surprise on the asset quality side, and the markets were expecting this number to be far negative, which has actually come out pretty good compared, if you compare it on a YY basis. Our sense is that both these companies definitely would take a longer time to recover, and at least for the next 2 to 3 quarters, earnings recovery is unlikely to happen. So I think, at best these can be market performance, but yes, to a large extent, all the near-term negativity has been reflected in the market prices.
Okay, so near-term negativity reflected in the market prices. Ruchit, M&M Financial has had a bit of a volatile last few days. How is the trading position looking like here? What if it starts off slightly weak today, Ruchit? What do you do there?
So I think if you see last couple of weeks along with the markets, the stock has seen a very sideways price action wherein 182, 183 has acted as a resistance, and on the low side 168 on the low side, I mean 154 has been a support for the stock. So I think next directional move technically could be expected either if it breaches below 154, which would lead to much of the unwinding of long positions. So I think I would wait for a breakout either below 154 or above 182 today to take a fresh trade. If it breaches 154, no, maybe not only today, maybe in whenever in near term, then I think fresh shorts could be created.
Avinash, just a quick perspective whether BEL as a stock should be in focus today, because this whole defense push, privatization, maybe you get in foreign players to collaborate with Indian players, what have you. Morgan Stanley, I think one more brokerage, all of them have put out positive notes as well. Are you bullish on Bharat Electronics? Would you buy that stock in your portfolio?
Yeah, I think, Neeraj, if you look at the business model and the capital allocation of Bharti Electronics, I think clearly it's a debt-free business with a great amount of order book visibility. And I think the recent announcement by the government of relaxing the FDI from 49 to 74% is definitely going to encourage a lot of foreign players increasing their stakes in companies like Bharat Electronics. And I think clearly from a price point of view, the stock has corrected significantly. I would believe that yes, within the defense space, stocks like BEL, even Hindustan Aeronautics, or even a BML would definitely see a lot of price action today. But I think BEL seems to be well positioned in terms of the earnings visibility and in terms of the price reward ratio.
Okay, we've discussed Reliance Industries fundamentally with Avinash Gorakshekar. Viewers, remember, I know a lot of you must be, we just spoke about it 15 minutes ago, but we'll keep on talking about Reliance all through the morning, because that is probably that one Sahara of the bulls, as they say. We've spoken about it fundamentally. Technically, Ashish Chaturmota, Reliance Industries, if it starts off marginally higher today, what would your trading bias be?
Yeah, so here I think it's in a strong uptrend, and the last 3 days which we have seen as a dip is more of a profit booking after a very, very strong jump from almost 1200 to 1600 in a very short span of time. So I think keeping that in mind, 1400 is going to act as a very, very strong support, and with that as an stop loss, I think stock has a potential to again retest and cross the recent highs of 1590 and create a fresh high towards 1650 to 1670 zone. So I think broadly it's on a buy category, and with a stop below 1400, on opening, if it opens somewhere close to 1470, 1480, it would still be a buy.
Okay. Well, that's the larger call on Reliance Industries as well. Do watch out for that stock individually in the session. I would watch out for AU Small Finance Bank simply because the timing is interesting. Sunil Bharti Mittal's company has bought a small stake in AU Small Finance Bank, and that's the interesting bit really. It's not a very large one that has been bought, but Bharti SBM Holdings is the Sunil Bharti Mittal promoted entity, and they have bought about 0.79% stake at 414 rupees per share. So do watch out for this one. Promoters are the sellers, so it's essentially a promoter to promoter stake change that has happened. Just that the name is the interesting one, and let's see if there is more to the story. If our experts believe that, we'll talk about this post the pre-open session because we're very close to pre-open session. but watch out for AU Small Finance Bank in the session today as well. Okay, now viewers, do watch out. We likely to start off lower. Asia is doing okay, but the SGX Nifty is indicating a start in the red, which shows the hand of the market really and the sentiment around it. The US futures are trading well, and therefore not very well, but well, and therefore we have some bit of positivity around the globe. Can India still correct significantly in an otherwise positive globe? That's the key question. We'll get to know. But here come the first trades on the markets this Monday morning. We want to have a 2% uptick on the Sensex. That I believe I'm pretty sure of, but let's wait and watch what happens. Strange things happen at times. Reliance could be that big support that the market is indeed watching out for. Vedanta could be an interesting mover in the session today as well. So those are the names we are watching out for. What is doing well? Well, I think Reliance is likely to be the top gainer, so about 1400, 1500 or thereabouts, but these rates will change, of course, so do watch out for them. I mean, we may not have a rate around 1500, but it's an interesting piece of news. Bharti Infratel about 2.2% higher. Bharti Airtel looks like starting off marginally higher. I do urge you watch out for Vodafone. I'll get to that in a bit. ONGC, JSW Steel, Mahindra and Mahindra, Vedanta, all of them start off well, but the man of the match is Reliance really. For now looks like the biggest gainer in the session. What is not doing well? Coal India, 10% down. I think this whole conversation on coal mining, I just want to urge viewers that this is something that was discussed even in January. And therefore, the question mark would only be whether this firmly suggests towards an end of monopoly of Coal India, but it might not be negative. It might just make Coal India more efficient. It's trading at really good valuations as well. I don't know if there's a 10% downtick. We'll talk to Avinash about it, but that's a stock that is starting off low. Autos are starting off low. Maruti, Bajaj Auto, etc. I don't know if it's the impact of the lockdown extension, but yeah, all of those are starting off lower in the session today. HDFC Bank flattish in the session. Banks may start off lower as well. So these are a few names that you have to monitor in trade. At the broader end of the spectrum, I dare say I will watch out for M&M Financial, L&T Finance Holdings and the likes, because those would be the stocks that would be the most important ones to monitor. Interglobe Aviation, by the way, looks like starting off with a big downtick. Let's wait and watch if indeed this is how it starts off in the session. PVR, another 3-4% downtick. So all those which get impacted by an extended lockdown look like starting off weak. Indian Hotels, 4.5% lower as well. Interglobe is the top loser, really 10% on open. Let's wait and watch if this lasts. But gentlemen, back to our experts actually. Avinash, coming on Coal India, we discussed metals at length, but Coal India, is this the impact, and this stock is now giving off some of those opening blues, but do you reckon this is a negative for Coal India, or do you reckon that the valuations are so supportive that at lower price you might want to buy what is currently a monopolistic coal supplier in the country?
No, I think Neeraj, this news flow, yesterday from the finance minister is definitely longer term positive for the entire sector as a whole. But for Coal India, I would believe that any immediate impact is unlikely to happen, and definitely in the near term, negative news flow could obviously impact the share price. But I think overall, I would believe that the current price discounts, possibly the kind of negative surprise which was anticipated. As you rightly mentioned, this was in the pipeline for a long time, and now since it has happened, my sense is markets would closely observe how Coal India, manages to control its market share. But yes, overall for the sector as a whole, it is a positive. So I would believe that one can continue to hold on. And yes, probably how production gets ramped up and what the kind of management commentary going forward is would obviously continue to re-rate the stock going forward. So no need to panic in the near term. But yes, longer term, I think structural change will actually help all players in the industry.
BEL, viewers, watch out for this one. I mean, like I said, a lot of tactical calls on this one, and therefore that could be interesting. We'll revisit this stock at 908 because these pre-open rates could be a bit deceptive. So a lot of these active names, we'll talk about them once the pre-open rates look like settling down. But Ashish, I want to ask you, you've been very bullish on the specialty chemical names. If the market is indeed looking a bit wobbly, would you continue to stay bullish? And if so, which is that one name, or which are those one or two names that you believe people should continue to hold in the portfolios?
Sure. So I think two names which I would like to have a bet. First one would be Vinati Organics. I think this is one stock which is which is looking very, very stable and technically as well as some fundamental developments are there. So I think with a stop around 930, Vinati looks good for 1080, 1100 kind of target in an immediate short term. And in the agrochemical theme, I think PI Industries is one name which has seen some profit booking from its recent highs. But I think 1440, 1430 is going to be a very, very strong support for PI Industries. I'm expecting the stock to cross its all-time high and can target somewhere close to 1700 in next few weeks. So I think my top bet would be PI Industries and Vinati Organics in that entire basket.
Okay, so viewers, watch out for those names in the session. Now, what about some of the other names? ONGC starts off marginally higher. Crude has been on an uptick, and maybe that's why it is doing what it is doing. The other one, which is doing remarkably well, is Jubilant Life. Fourth day of an upper circuit, I think, or a fifth day. I'm not completely sure, but 4 days for sure. And 496 and counting for a Jubilant Life. So do watch out for that one in the session today as well. It's looking very, very interesting. Fundamentally, Avinash Gorakshekar, Jubilant Life, if you get a chance to buy, would you buy it?
Yeah, I think, in fact, Neeraj, the news flow for Jubilant Life has been quite positive, and I think, whatever earnings, accretion is going to happen is going to possibly help the company post a kind of a better set of numbers for FY21. Our sense is that, despite the fact that the stock has moved up, in the last 4-5 sessions, the earnings recovery could be definitely be a lot much better than what the market expects. So I think, yeah, current price as well as even if the price corrects anytime, this could be a good opportunity to buy. And I think it had underperformed significantly earlier. So I think this kind of positive news flow and obviously the earnings recovery impact could possibly keep the stock in action.
Ruchit, coming on Interglobe Aviation, there's a bit of a volatility today. What do the positions look like, and how would you trade it?
I think recently we have seen a good amount of underperformance in this stock. Since last 2 or 3 weeks, we have seen some consolidation, but I think this consolidation just seemed to be a corrective, a time-wise correction within a downtrend. We have not seen any kind of buying interest or a high top, high bottom structure coming in. So I think the undertone or the trend still continues to remain weak. On the lower side, 700, 750, I think that would be the levels where the stock could go to in the near term.
Okay, the pre-open rates are settling down now, viewers, and I must say, viewers may be hoping that Reliance would be to the rescue. Yes, we are likely to start off in the green. I don't know if this will last because Reliance is not showing the traction that a typical bull would have anticipated on the back of an announcement. Maybe this was widely anticipated or otherwise, and that's why. But the reaction is fairly muted on Reliance Industries, 1470, just about 0.73%. That is not to say that the stock won't do more. It could well do more. I'm just laying out the thesis that Reliance is not reacting as vigorously as it had reacted when the first or the second set of investors got announced. Facebook was a different kettle of fish, but even when Silver Lake or Vista were announced, I think the reactions were a lot more strong. Right now, it's a fairly muted reaction in Reliance Industries. Keep that at the back of your mind. It's just about okay. Vedanta is starting off about 1% higher. Hindalco slightly higher, but not that great. And the Bank Nifty is showing some weakness. So be mindful of that. No big cracks as yet, but banks are certainly looking slightly wobbly with Kotak, Indus, and ICICI, all three starting off or looking like starting off in the red. Okay, like I said, we should talk about some of these active names post the pre-open session starting. So here's my question to Ashish Chaturmota on BEL. That stock looks like starting off well. Maybe you had an idea there, Avinash, but Ashish, but since it's doing what it is doing now, what do you do here at these prices?
So I think that it has formed a strong double bottom formation on the daily and weekly chart, and we have seen very strong volume activity on the last trading session. So I think stock is poised for a move towards 80, 82 kind of zone, which implies a decent upside from the last closing. On downside, I think 63.50 itself is going to act as a very important support zone. Although there is a possibility stock might might open a little higher, maybe somewhere around 69.70. But still, I think a potential upside towards 80.82 is there for what one can witness in Bharti Electronics Limited.
Okay, Ruchit, what about BEML? That one is up about 5%.
I think yes, no, we have seen some sideways consolidation in last couple of weeks, and if the stock manages to hold the support of 550, 560, then we can up move towards 740, 750 cannot be ruled out. So I think at current levels, if one is looking from a short-term perspective, then one can look to buy the stock with stop below 540 for near-term targets around 740, 750.
Okay, we are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, General Atlantic will become the fourth investor in Jio Platforms, buying 1.34% stake for 6,598 crores. The stock likely to start off marginally in the green. Cipla reports 1% drop in revenue, but net profit drops more than 30% as COVID-19 related costs hurt margins. It's been a tough quarter for L&T Finance and M&M Financial Services with muted disbursements and asset quality concerns for M&M Financial. Bharti SBM Holdings acquires 0.79% stake in AU Small Finance Bank for 414 rupees per share. Promoters sold the same. Maruti Suzuki restarts production at its Gurgaon plant today. Persistent Systems wins a 5-year contract from a US-based multi-cloud enterprise with an estimated revenue of $50 million. And Kotak Securities cement dealers check indicates abrupt price hikes in April and May, but mainly due to erratic supply and a fraction of normal volumes. Well, that could be interesting to look at cement from that perspective. But first, AU Small Finance Bank. Avinash, this stake buy from SBM Holdings, which is a Sunil Bharti Mittal promoted entity, interesting you think? Does it get you thinking? Would you look at AU Small Finance Bank afresh?
I think Neeraj, from an operational perspective, AU Small Finance Bank has done very well. Especially if you look at their asset quality and their loan book growth, despite the headwind being quite challenging, the bank has done pretty well. And I think within the small finance bank, I think it remains to be the most well-positioned kind of company. Our sense is, this equity deal between two promoters and Bharti Airtel's promoter buying into AU Small Finance Bank is definitely sentimentally positive. But I think the core operating metrics for the business continues to be solid, and I think the price has corrected significantly from its 52-week highs. So I would believe that yes, somebody who's looking at a longer term kind of scenario, this could be a well positioned bet even at the current price level.
Okay, so do watch out for this one as well. Avinash, any investment idea? Would you look to invest anything? And let's assume 25% and not 100%, or would you look to buy anything?
I think I would look at Escorts, Neeraj, quite closely, because market reports suggest that the Rabi crop has been quite good, and hopefully the tractor market could be the first to revive. In fact, whatever agriculture reforms have been announced recently by the government, I would be quite positive on the tractor space, and I think Escorts has done reasonably well even in the fourth quarter. So I think the stock has corrected also quite significantly from its top. So Escorts could be a reasonably good bet at the current odd levels. We could see an upside of at least 15 to 16% over the next 12 months.
Avinash, thanks so much. We leave it at that. Thanks so much for taking the time out and being with us. Appreciate your time. Well, let's nail it down to that one top idea from our experts. Ruchit, to you first. Your top call for the day today.
I would recommend buying Marico today. We have seen a breakout above its 89 EM, and the stock is poised to head towards its 200 DMA now, maybe next 1 or 2 trading sessions. So one can go long around the opening levels of 320 today, keeping stop below 310 now for targets around 338.
Okay. Now, what about you, Ashish? Your top call for the day today?
So anyways, I would like both my ideas, but still I think I'll go with Coromandel International, where some agri push is going to be there in the market. So 600 should be the trading stop loss for an immediate upside target of 690, 700 in Coromandel International.
Okay, so Coromandel International is your top call, but you would stay long on Bharti as well, I presume.
I would need to say so that it's in the cash segment. Bharti one can use in the FNO segment.
Okay. stay on. Gentlemen, we'll just take in your quick opening thoughts in the session today, or rather post-open as well. Would love to have your thoughts before we thank you. But the markets look tenaciously poised, don't quite, actually not tenacious at all. I take back my words. They look tentative right now, and we're likely to start off lower for the bank nifty, which would mean that it would put pressure on the index. So do watch out. The uptick could actually get corrected very, very quickly. Let's wait and watch, because again, I repeat, Reliance is not giving the kind of support that people would have hoped for. So you have to bear that in mind. But here are the first trades this Monday morning after all the stimulus package announcements have done, and quickly moving into the red for the benchmark indices. So do watch out. It's not looking good. And Nifty Bank down about 1% already. Sensex and the Nifty 2 looking weak. What's starting off well? Cipla about 1.88%. Infosys 1% higher. Hindalco 0.5%. BPCL, HUL, Reliance marginally in the green, if at all. Nothing too dramatic. So it's not looking all that great, viewers, for the markets. Be mindful of that. Everything is looking wobbly. Look at Coal India, 3% down. Axis, ICICI, HDFC Bank, all of them cracking. HDFC Bank now 875. Z is at 162. It's not looking good. Bajaj Finance marginally lower as well. So starting off very, very wobbly for the benchmark indices. What about the broader end of the spectrum? Well, we will watch out for some of the names likes of Inox Leisure and PVR, which have corrected. Indian Hotels have corrected. Clearly offshoots of the extension of the lockdown. Interglobe Aviation down. M&M Financial down 4% on account of the numbers which have looked wobbly. What is doing well? Jubilant Life about 4.8 or 5% higher. There is some strength in Sudarshan Chemicals, some strength in BEML 4% higher. Bharti Electronics 3.5 or 4% higher. L&T Tech marginally higher. The numbers looked okay. Zensa Tech continues its uptick, but those are few and far in between. The larger trend is lower, with banks really at the punishing end. So it's not looking good at all for a bunch of these names in the session today. Do watch out. I think it is looking very, very weak. Vedanta marginally higher in trade. Okay, quick opening thoughts. The bank nifty clearly the big culprit. What do you do here, Avinash, Ashish? Because this is looking very, very weak on open itself.
Yeah, I think overall banking and financials is in a very bad shape, and particularly the private sector banks, names like Axis and all, are showing a lot of weakness. Keeping that in mind, I think Bank Nifty on at a spot level has a potential to see 18,000 kind of levels in the next couple of few trading sessions. And I think going forward, 18,700 itself is going to act as a very, very stiff resistance. So definitely, I think if someone is looking for some kind of shorting opportunity, Nifty Bank looks weak, and within that, Axis Bank would be my top short bet, where one can keep a stop around 386. On downside, can expect the stock to retest the levels of 340 to 338 in the next couple of few trading sessions.
Okay, Ruchit, what about you? Your thoughts?
I think almost couple of weeks we are seeing some range-bound action as far as index is concerned, in which 9,000 is a good support. I think even if you look at the options data, the 9,000 put writing has been quite decent in the weekly as well as the monthly series. So I think for today, 9,060, looking at the intraday charts, is the support on Nifty spot. In case if we see Nifty coming towards 9,060, then that could be the level to create fresh long positions just for a pullback move, keeping a strict stop loss below 9,000.
Okay, just trying to look at individual stocks, gentlemen, for a minute, and just to help our viewers navigate through this. Ashish, I'll come to you first. At 1476 or 1477, what is your call on a Reliance now?
So as I mentioned that in the morning, that if it opens at say 1460, 1470, some kind of upside could definitely be visible. So I think next upside target in short term could be 1520, 1530. But positionally, I believe stock has a potential to cross its recent highs of 1590. I think one should keep a stop somewhere close to 1425 now. Earlier we were talking about 1400 and stop loss, but that I would like to revise basis today's opening. So 1425 should be the revised stop loss for holding on to the long positions in Reliance. And positionally, I think 1590, 1600 could be looked as a short-term target in Reliance.
Okay. The other one, and a quick thought out here, Ruchit, and that is on HDFC Bank. It's down about at 875. It's the level from which it bounced back the last time it sunk to these levels. Is it at supports, or would you not quite look at it that way?
Yes, 871 is the support for the stock, which was seen the low on 12th of May post the gap down opening. So I think today's move would be quite crucial if we see the today's second half, maybe I think would be quite crucial if we see the stock managing to hold on this 870, then only we should expect some pullback move. So I think any existing long positions, if there are, then 870 or just 2 or 3 rupees below 870 could be the stop loss.
Okay, so that's the other thing that you have to monitor. Ashish, I'll let you go on that note. Thank you so much for joining in. Ruchit, just stay on. Just one quick follow-up question that I have for you, and that is on some cash market stocks which might be looking weak. The likes of IRCTC, we spoke about it fundamentally. How does it look on the charts?
Neeraj, if you see, then although it has a limited historical data, but one thing has been noted that from the lower levels of around 700, 800, the stock has witnessed very good amount of buying interest. So I think whether it's traders or long-term investors, on dips they would look to accumulate the stocks over here. Technically, if you look at very short-term charts, then I think last 1 month the stock has traded within the range of 1400 to 1200. 1200 also, it is the 89 days exponential moving average, and which is the swing low as well. So I think on the lower side we could see this support getting tested 1200. It would be very interesting to watch whether in case if the stock has to bounce back, then 1200 could be the good levels to take some contra positions and go long on, keeping a stop loss below 1150 then.
Okay. Jem and Ruchit, thanks so much for joining in and giving us your perspectives as well. Now, viewers, let's try and make sense of all of this. We've got a very special voice, Kenneth Andrade of Old Bridge Capital Johnson right now, to try and make sense of all that's happening around the world, juxtapose it with India, the 5 days of stimulus, the current valuations, so on and so forth. Kenneth, thank you so much for taking the time out and speaking to us. Good morning, Neeraj here. Can you make some sense about Can you make some sense about what's happening? Because a lot of people are trying to look at the economic decimation and asking questions about why should the index be at these levels, but then question marks come around liquidity and the global liquidity and how that might be supportive. How are you looking at the global piece and then the local piece?
Quite obviously, there's a lot happening, and it takes time to process all this information and data. So from 2 points, one is international and one is domestic, and obviously I'll touch upon corporate earnings and what are the ramifications of all of that. Yes, we've got the governments who have stepped into this pandemic across the world and trying to mitigate the economic disaster that is there, and everyone's supplied a different different levels of capital into the entire system. From an India context, I mean, if you look at a degrowth of between 5% or 10% within the Indian economy, given the fact that you're going to miss the first 6 months, you're definitely going to miss the first 6 months in terms of industrial output or in consumption spends. The government's essentially stepping in with a number which is roughly the same. So my sense is what we're effectively trying to do is stem the rot in the entire system. A minus 10% growth, 5% or minus 10% growth in GDP, and the government has stepped in, and you will get roughly you're anchoring roughly for a flattish year end for in terms of the GDP numbers. So that's what's happening on the India side. I mean, you can go down to the specifics, granular specifics, to see where it is coming and how it is coming. Globally, they've done the same. There's some countries that have gone extremely ambitious, and there's some countries who cannot afford the kind of stimulus that the rest of the world is doing, who probably get left out with all of this. So 2020 calendar year and 2021 financial year, as far as India is concerned, is almost a washout year for corporates out here. What we need to realize is that just give up the first 6 months of economic activity and then concentrate on the second 6 months and see if we can pull back a significant amount of all of that. Of course, getting the supply chain and getting labor back into the system, all of this will have its own implications and how fast all of this can take place. But net companies and corporates are finding their way around. I think we'll come out of this pandemic a lot more efficiently than we've gone into it. And it should be good into 2021 from a profit and from a P&L standpoint. but more on the expenditure side. As corporate India will completely shrink its expenditure. So 2022 financial year, it's not as I don't think it's going to be as bad as most market participants are talking about it. Sure, we will crawl back, but forget 2021. We need to consider 2022. Last 6 months of financial year 2021 will give us some sense of what the following year will be like. So I'd say just concentrate on problems that are there or in industries where the problems are, and just avoid them.
Kenneth, would you take actually a question that maybe I'll ask you later on. Okay, ignore the cash question. Let me just come to you about what do you think this whole start of the rhetoric between US and China might do to global sentiment, and if indeed global markets were to come off, could that have a corresponding larger impact on an already weak Indian market?
You've got to realize that one of the countries are going into an election, right? So this rhetoric will be there. I see most countries that go into elections and have a weak economy at the same time during that period of time, they do start that rhetoric. But all said and done, if this escalates, yes, of course, asset markets globally will not fare very well.
Okay. So then, would you believe that will continue to have an impact on the markets? Would it bring the markets lower?
Well, you have to look at the economic indicators as to what's happening. I think this is a century where it's not very easy to go into war, because it's not very easy to go into war. Not because you can't, it's because the aftermath is going to be quite dramatic. So I think that's an extreme to look at. But if you look at things getting solved out in a period of time, yes, I don't think there's going to be as the environment dramatically. There will be relocation of commercial structures or commerce structures that are there, but we will find our way around 2020, and you'll see some semblance of sanity returning in 2021 and probably 22.
Okay, Kenneth, we know that the GDP growth numbers, the corporate earnings, etc., are all going to look wobbly. In your portfolio companies, also, I'm guessing you must be anticipating some of these earnings to take a hit. What would you be doing? Are you already anticipating this, and do you believe that valuations might be discounting these lower earnings in some of the sectors, or do you think that there could be further hits if indeed the disappointments are larger than what people anticipate?
Neeraj, firstly, our style bias is more a little bit balance sheet driven than it is profit and loss driven. So in an income and expenditure statement, you always look at earnings per share. So if you're continuing to look at earnings per share, obviously 2021 is not going to be great. But if your style bias is looking at a balance sheet, which is essentially book value, then price to book is coming to a level where you're touching historical lows. So our bias has always been look at how value can be captured by portfolios on the value of the asset on the ground or the value of the business on the ground. And if the price or the market capitalization is equivalent to historical book values that you see and optically see, I think there is a very high probability going into the next couple of years where equity markets will generate a reasonable amount of even in the long term, a reasonable amount of return on your investments right now. When you turn to the P&L or the earnings in the near term, yes, there is an accident that has happened, and profits will fall off the cliff definitely for this financial year. But that if profits fall off the cliff in this financial year, the asset sitting on the ground or the book value that is there is still capable of generating a certain amount of return, a certain amount of earnings, and I think that's what we need to focus on. So this the environment suits us. I think we struggled right from 2018-19 trying to find value in a business, but this is just from a investing bias or from a style bias. This suits us. This suits us pretty much fine. I think we haven't had it so good for since 2013.
Okay. Kenneth, a sector that is probably not in the best of balance sheet shapes, but earnings look like picking up, and one of the two and a half players are trying to mend their balance sheets as well as Telecom. What are your thoughts here? Not the best balance sheets, but is in vogue currently.
So structurally, this the deterioration of balance sheets had to end, and usually this deterioration ends when sanity prevails and there's no more cash flow left to burn. I think we've hit the we are there. Whether it's a two-player market or whether a three-player market, I think three players will also survive, two players will also survive. But at the end of the day, it's a fairly mature business. I mean, the three participants or the two participants or the leftover participants have to agree to pull back profitability of that space, because it's not very cheap to run an infrastructure business in accessing such a large population. So I think we're at the bottom end of that entire cycle. We have seen optically, and we've seen it in some of the numbers that are coming through, that a lot of sanity is prevailing. My sense is a lot of them will exist all three of them will exist over the next 5 years. The choice is yours as to which one you want to participate with.
Okay, Kenneth, the call around a sector which doesn't have balance sheet stress, but it's a bit difficult to gauge, and that is autos. Valuations have corrected a bit, but the scenario looks completely off, because while companies are saying that they might see buying, I don't foresee how, with the earnings of individuals coming off so much, that people will look to buy. If anything, they might even downtrade on what they would have wanted to buy if the P&Ls and the balance sheets permitted them. Any thoughts here? Do you have any auto exposure? Are you looking to get any auto exposure?
So this is a more broader question, and I'll answer that way. I think discretionary consumption will take a backseat for a little while. Like you did mention, there is a challenge as far as incomes are concerned, and it's not just domestic. It's something which is internationally prevalent. And if incomes are a challenge, then obviously you've got the ability to leverage into that cycle even lower. So from a consumer point of view, I think we will struggle to get demand back into the consumer cycle. And if we struggle to get demand back into the consumer cycle, obviously leverage is not going to be there, and there are challenges around companies who provide that leverage into that entire system. So no, I think valuations are nice in that business, but they're now going to regain their previous highs. Okay, and some of those discretionary spend companies had gone to historical highs in how market would want to value them. I think we're taking a pause on that. Things will normalize. It's not an industry that will degrow in perpetuity. It's an industry that will have a challenge for a year or two before it comes back to normalcy. But I think the best is behind us. The consolidation that was there the fragmentation in that business that was there will start to consolidate. A couple of companies will walk away with larger market shares, but it's not going to be such a high growth business as it has been in the past. But even for growth to come back, our senses are that it's going to take some time.
Okay.
So we don't own too many. We don't own too many automotive companies, and we don't own anything which is there in the consumer cycle also.
Wow. Okay. I know you don't own financials, but you don't own anything related to consumers right now, is it?
We haven't had that for a very long time. So okay. Just to take that a step back into our portfolio construction, consumers, I mean, the consumer cycle and the financial cycle were intertwined. The financial cycle that did very well was essentially the value chain of the consumer cycle. So everything that did well was private sector banks, real estate lending, consumer finance, consumer discretionary finance, and everything on the opposite side were consumer businesses. So that's the cycle where we think where we were not very comfortable with both the fragmentation of that industry, as well as the valuations of that space, and we stepped behind on that.
Kenneth, the other question is this whole agrarian piece. Now, almost every company that I speak to says that the rural income is not looking all that bad. You understand this cycle better than most. What is your sense? Do you think rural and rural focused companies might actually stand to fare better? Rabi's looked okay, income somewhat okay. Escort's commentary seemed to suggest that. What is your sense across the different facets of that chain?
I mean, it's a relative way of looking at it, and agriculture, at least in the first half, will hold up. So the Kharif season is about 60% of the entire agricultural business, and most of it comes in this first half. I think that's holding up pretty well. On the ground, there is movement of all agri input companies. There is reasonable amount of demand, if it's not negative at least, for farm equipments that is there. So it's holding up. It's not as it's significantly better than anything that's got to do with industry or urban consumption. The caveat to all of that is agriculture as a percentage to India's GDP is just 15%. So I wouldn't bet I wouldn't bet too much of money in tending to believe that agriculture will pull India out of this situation. I think we've still got to find a long-term solution on how to handle rural population, because that, I mean, there's a disproportionate amount of money and a disproportionate amount of people in rural India, but not enough amount of incomes out there.
Kenneth, one final question. Where is it that you are most bullish on, if at all you're bullish, and where is it that you are very skeptical on? Whether you own in the portfolio or no is a separate thing altogether.
So we covered a little bit of that. The skepticism comes from the fact that incomes, and when will incomes come back to normal? And if incomes have to come back to normal, then obviously you will see deleveraging of the household balance sheets first before the consumer cycle starts, or before you see the enablement, before the consumer will actually get enabled to get back to its spending ways. Where I see the opportunities, and it's not that corporate India or India INC is woken up to the fact and gone ahead and got market share. I wouldn't blame corporate India. It's also our policy decision making. Is that there is a window of opportunity that India came across in the 90s, is effectively create an environment where you can address the global market share, and that's a positive part of it all. But we also have to look at it internally and create enough demand for companies to generate cash flows domestically, get those cash flows, and then invest it into businesses wherein they can go out and get global dominance. I think I'm reasonably positive as far as that opportunity is concerned, and whether our policies fall in place or not, some entrepreneurs will be able to create large business structures out of India. So that's how I'd look at it. That industry capex cycle, all of it will come because now for reasons of global trade or the dismantling of global trade, we have a significantly large opportunities come our way. The context of all of that, while it's a global commodity which exists and everyone's got the benefit of, if at all, energy prices have completely collapsed. I think between the two, that's where the largest opportunity is. We'll have to see which entrepreneur, which business house, or which business goes ahead and actually captures that cycle.
Okay. Kenneth, it's always great chatting with you. Thank you so much for taking the time out and being with us today and giving us your thoughts. Completely run out of time, but appreciate your time this morning. Stay safe.
Super. Thank you very much. Thank you very much.
Viewers, on that note, it's a wrap on this leg of Indian Open with the news that the Bank Nifty is the principal culprit, down about 3.5%. Be careful of financials. Thanks so much for tuning in today.